I don't know what it is. I feel like maybe the mark is like 40 or 50 million under management. And the minute you cross over that, you're a king of the universe and you're the smartest person that ever walked or something like that.
Well, that assumes you even manage money, yeah.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots, and I'm joined as always by the brain trust himself, Mr. Chase Taylor. First of all, my mind's still going on the interview we just did. And for those of you that don't know, we just did an interview with Brent Johnson, Santiago Capital, friend of the show. We've had him on several times. Also a personal friend of Chase and I both, and was actually the guy that introduced us. So kind of going back home almost in a way. And that interview will be posted later today. And I just always love chatting with Brent. Very thoughtful, and not too verbose, not too impressed with himself. It's kind of rare in this industry, but I don't know what it is. I feel like maybe the mark is like 40 or 50 million under management. And the minute you cross over that, you're a king of the universe and you're the smartest person that ever walked or something like that.
Well, that assumes you even manage money, yeah.
Well, there's that too, right? There is that too. I've had some funny run-ins with that, of these people that just, position themselves to these massive managers, and you find out they run like $5 or $7 million. They're managing their parents' IRA accounts. He's certainly not one of those guys, and he's had some very prescient calls, and it's a great conversation that I always enjoy talking to Brent, but especially considering where the dollar's at, where gold's at. It was a great time to be able to get him on.
For sure.
So anyway, moving to today, we're kind of in this market phase of, we rally 1%, we give 1% back. We rally 1%, we give it right back. Kind of this sideways movement. But give us the market rundown. Let's roll through the indexes, and then we'll kind of get into some of the particulars.
Yeah, S&P closed down 0.84, Qs down basically right at 1%. Small caps 1.07, equal weight down 1%. Mag 7 down about 1.2. All world ex-US down 1.26, thanks to the dollar being up, which we'll get to. Oil up a little over 2%. Gold down 0.4. The dollar finished up about 0.7%, so a pretty strong day for the dollar. Yields down 3 on the front end on the 2, and then down 6 on the 10. That stemming largely from the fact that next week the Fed will have a meeting to discuss the supplementary leverage ratio, which we've been talking about here, talked about with Kevin Muir on that interview. At the end of the day, they're gonna make it easier for the banks to buy some treasuries. So that's why treasuries rallied more than anything, I think. But you had vol from month VIX futures closed at about 21.14, up about 4% on the day, and a lot of this action, of course, on the incremental news coming out of the Iran-Israel conflict and the I would say the likelihood of the U.S. joining it having jumped a lot in the last 24 hours, being a part of what's kind of rattled the market here.
Well, yeah, and then the Trump tweet is calling for total surrender of Iran, right? We're all used to rhetoric, but that's one of those statements that it's one of those statements that, if you think that a quick resolution is on the table, or you're going to come to a quick agreement with Iran, and you're determined to not get involved, I don't think you make that statement. You know what I mean? It's tough to read through Trump because so much of his statements, he's so untraditional, right? So you can't apply the traditional rules of presidents saying certain things, and you know what I mean? Like it's hard to know. But you mentioned several things today, or we were discussing several things today in our investment meeting about what we know is happening, and we've got carriers moving into that area, right? I mean, run us down that list again of so what's going on.
There's a carrier strike group on the way. A destroyer just went in. We have a lot of tankers from the Air Force moving over, and that's a big deal. Like the Pentagon kind of shaped this like, oh, like this is defensive stuff. Like, no, tankers aren't defensive. They're to fuel fighter jets, but and bombers for that matter. And some fighters. So like we are putting a lot of assets in the region, which suggests, the likelihood that we actually get involved is not small at this point. I think we've come down to a pretty binary thing where it's they capitulate on, all right, fine, we don't have to enrich any of our own uranium, and it's that or we join in on the party. And now that there's total air superiority, it seems like we could just join and just help the Israelis bomb these nuclear sites to try and up the odds of destroying or delaying their nuclear program. So that's where we're at on it.
I want to go a way that we don't typically go in these conversations, but I want to go that way because I find myself battling this same question inside my own mind. I hate seeing anything progress toward us getting involved in another conflict of any kind. At the same time, ensuring the idea that the Iranian regime doesn't have nuclear weapons, I think, is probably attractive to most people and most governments in the world. Yeah. I can't really figure out exactly where I lie on this one.
Same, honestly.
And
to be clear, like I think this is important context. The United States intelligence community's current assessment, and this is as of now, is that they are not trying to develop a nuclear weapon. In fact, it came out in the Wall Street Journal today that the Israelis made their case to our senior intelligence officials and our best analysts, like, hey, this is new intelligence. This is why we think they may be making a move soon. And essentially, our people were like, nah, we don't really think so. So even after getting that brief from them, our intelligence kind of conflicts with theirs. And to be fair, Netanyahu since 1992 has been saying repeatedly that they're about to have a nuclear weapon any minute here. So when you look at it through that lens, it's not even clear that they're doing it. But whenever you're enriching uranium to relatively high levels, and a lot of it looks really sketchy, and you're gonna bring on a response. Obviously, they've brought on a pretty significant response. So that's why it's tough. Like there's a part of me that's like, I'm not even sure they're doing it, and there's a part of me that's like, well, why take a chance? I think the hardest part though is like, can you even guarantee that you're going to actually get rid of their program? Let's say they have a weapons program. They're about to do it. They were 2 months away or whatever. Just because you drop some bombs on this stuff doesn't necessarily mean they can never do this now. Or I think in best case scenarios, you delay it. And even then, for how long, we don't know. It's just the unknowns in it are substantial. So it is tough.
Yeah,
you can make a really good argument, I think, on both sides of this. And
the one thing I'll say to the pro side is I think the risk, because it is Iran and it is this topic, I think the risks of getting sucked into a prolonged entanglement are less, just because I don't see, to me this issue is less risky to the world than the Ukraine-Russian scenario. And the reason I say that is I think other world powers are much more likely to align on the side of Russia than they are on the side of Iran in this scenario. And to this point,
no one's really arguing for them in this case.
Right.
They're taking exception with methods or tactics and not using diplomacy, yada yada yada. But no one's out there cheering for Iran to get nukes. Literally nobody. So
yeah, there's no, they don't have big allies in that hunt. One of the odd things to me though is, like you said, if they weren't running a weapons, or if they weren't trying to develop nuclear weapons, and I am not an expert on this topic, but from my understanding, you alluded to this, but the amount of uranium and the level to which it was being enriched was far beyond what's needed for nuclear energy, correct?
So it depends. Like to do normal nuclear energy, it's a pretty low threshold for enrichment. But there are uses at higher levels to include, like, a lot of this new nuclear stuff we talked about, like small modular reactors and microreactors and all that kind of stuff. They actually require a higher level. There's a lot of medical uses that require higher level. So like it's not like, there's no need, but at the same time, like, the offer's kind of been on the table. Like, hey, like, we're not telling you to get rid of your nuclear program, or like, if you guys want to run nuclear plants, that's fine. Like, have at it. It's just, let's let someone else do the enrichment for you, and then you like import that. That way, like we're a little worried about it. Like and they signed up into non-proliferation agreements, and they were breaking them. Like that stuff's pretty cut and dry. So it's tough. Like I think at the end of the day, they were trying to build I think the most likely scenario is they were trying to build a really big negotiating chip. No, yeah, you could. I think it's pretty clear at this point that hasn't worked out well. But
I think that's a great point, because the one part about this, they have been using it as a negotiating chip. And I feel like there's been like kind of purposeful opacity on their part to kind of cloud the issue and inject uncertainty. But it's kind of been a cat and mouse game that their regime has been playing with the rest of the world, specifically the U.S. and Israel, for quite a long time. And I think that very well may be the case, right? The threat of nuclear weapons getting them what they want, as opposed to actually having one. Now, I mean, I think if you ask their regime if you could have nuclear weapons right now, would you want them? I think they'd say 100%.
Today, yeah.
Yeah, today.
But, I mean, my take on this, though, is if they really wanted it, they could have got it. Like, it's... I mean, there's a lot of countries in the world that have them these days. I mean, like, if you want it, you can get it. Like, you could have made all these same arguments against North Korea. Well, North Korea got them. Like,
yeah.
No one wanted them to have them. They got them,
Yeah.
So I think if Iran really wanted to do it, they could have done it along the way. But I think their enrichment goes up to like 60%, and it's pretty hard to you can't really tie that to civilian use.
Yeah.
Which suggests there's only one of two things, like negotiating or like you want to actually get the weapon. And even if I'm right that they're just doing the negotiating side, like the stakes are pretty high for ignoring the other tail, especially if you're in their same neighborhood and they don't like you.
Yeah. Yeah. It's going to be there's so many different. I feel like you're in like an industrial kitchen, man, and there's like 20 different pots boiling. You know what I mean? Like, you're just looking around going, boy, I hope this all turns out okay, because I mean, it's hard to keep up with, right? Like the amount of potential conflict out there. And then remember, anytime you're talking about stuff like this, there's generally the worst case scenario happens very rarely. But with this many moving parts around the world, you got to have your head on a swivel, because I'm not just talking markets, right? I'm talking about like mankind. These are things that can spin out of control real fast. And it's an interesting and scary time to be alive, quite honestly.
One other piece of context here is we had the Iran deal, the JPCOA, and it put really strict regulations on them that they agreed to, and to not go above 3.67% on enrichment. They could only do a certain number, like a certain amount of enrichment. They could only have a certain amount of stockpiles. I think some of this from them was like us pulling out of that deal made them feel like they couldn't trust any deal to begin with. So like I think it's almost like if you guys are gonna leave the deal, then we're gonna enrich a bunch. So I think that plays into it too. But that just makes it more messy when you kind of think of the context. But
okay, now moving over to markets. I don't think, I think lately, like I was saying when we first started, you've kind of got this, you kind of have markets doing what you'd expect them to do. If you didn't know anything else in a geopolitical situation like this was going around, I would expect markets to get whipsawed back and forth depending on headlines. Granted, valuations in the U.S. are very rich, especially considering all the potential threats out there. But that's been the case for quite some time. But what else were you seeing? I actually thought that was another fairly impressive showing for gold in the face of a 0.7% ripper on the dollar. Now, obviously, one of the reasons the dollar ripped was geopolitical risk, which usually is going to create a bid for gold. But, we've seen it so many times in the past not play out that way. And I think gold is still making a very admirable showing, still looks very strong. Silver, though, is really the one that I'm looking at right now because again, I joke about this all the time about my technical analysis expertise. And I make a joke at it on purpose because I am not the technical analyst on our team. I'm the fundamental guy. But when you see a chart like that on a metal like that, it's the one thing I do know is that that's not the kind of thing you want to ignore. But again, this is your sweet spot. Kind of walk us through that chart. I wish we could put it up here yet. We're going to get that capability so we can show you guys the charts we're talking about. The stuff is shockingly complex. You know what I mean? Like as a side note, like you'd think it'd be, super easy. Just pull up a chart on your podcast situation, but it takes a little more work than that. But anyway, walk us through. It's a cup and handle formation here, but kind of walk us through what you take from that chart.
Yeah, it's a very well-defined cup and handle that kind of goes from, it went from like 2013 until I would say about a year ago. We broke out of that handle kind of like last spring. So you've already, since you kind of got out of that handle, you're up like 50%. So typically what a chartist would do is kind of do a measured move on how far you're, air quotes, supposed to go in that situation. And it's definitely higher still. And then I think importantly, so we're at 37.17 on front month futures for silver. And when I look at it, 38 is kind of a big level. And then 43, roughly 43 and a half ish is a big level. And then after that, you kind of have the all-time high of just under 50 on front month on just kind of the continuous futures chart where, so 38, 43 and a half, and then 50, that's your next three kind of bigger lines. But we have, this is going to be, if we hold above, this would be the first month that we have closed above 34.58 since 2011. So you're talking, this is a substantial breakout. We hit our head on that 34.58 level like a million times over the last 15 years. And then now we're finally, it looks like, gonna durably stay above it. So I think that move to 38 happens, relatively quick. Just looking at the chart today, like, you rip to kind of straight up to like just about 37. Then you kind of did a bear flag down to like 36 and change. And now you're right back up above 37. So it looks good. This is the highest we've been since 2011.
You know what's funny, man, and you don't hear enough talk about this, but for as much flack as precious metals investors have taken over the last 10 to 15 years, you start pulling those charts back to 2015, 2016, whatever, and then even further, especially when you're talking about gold, go back to 2000. There's some eye-popping performance in here, even when even when compared to U.S. equities. And I think it really throws a lot of water on the idea that having precious metals as an evergreen part of a portfolio is a bad idea. Just year to date, you have silver up 25% and the S&P's up 2.2. So, and then gold miners are up 51% year to date.
So,
Well,
you know,
between
and even if you go back
2014,
18 months,
2014, 2015, you could have picked up silver in the, $13 to $14 range.
yeah, I remember buying it at 33 on its way down from 50, thinking I was getting the steal of a lifetime. So it took me a while to get back above water there. But that 10-ounce bar I bought, that thing's
You're back in the money, baby.
Yeah, it took a while, but it's there.
It took a
I
while.
will not back test that against the S&P. Yeah, that didn't work.
No, not yet. She's got to run a little bit further.
But I got the utility value of that paperweight. That works.
That's true. It's store value, right? Other things we're looking at here, watching some of these ridiculous tech companies continue to run. I cringe internally every time I see somebody refer to CoreWeave as an AI company. Guys, if you're out there buying that, if you're out there buying CoreWeave hand over fist, just admit that you haven't done the research. You don't know what you're buying. I'm not telling you the thing's going down. Who knows in this environment? What I know is watching this thing rally the way it does when you're looking at the underlying fundamentals, it is confusing, I think is a nice word, right? These guys have got $23 billion in CapEx planned for this year. You're talking about a company that does $1 billion in revenue. Watching people pile into that equity where they're going to get, I mean, there's really no other way, right? I mean, they're going to have to sell a third of their market cap's worth of equity to finance that CapEx, right?
Yeah, go sell a bunch of bonds or get some big credit lines or whatever. I don't know.
Boy, considering their business model, I wouldn't want to debt finance it. I mean,
yeah.
When you're talking about that kind of a depreciation, if your game plan is to rent out GPUs and compute, I wouldn't want to debt finance it, especially when I got a stock that's trading at 70 times revenue.
It's not for me, that's for sure.
Yeah, it's a rental. I don't know who it's for at this price. These are the things that concern me. And we've seen crazy moves like this a lot, but you're seeing them more and more recently. To me, these moves reek of desperation. To me, these moves feel like people are going back to the well one too many times, and believing that these types of things are going to continue to work. And you're watching to run a stock like this, it's requiring less and less narrative, right? Like you just throw it out there, say it's associated with AI, and the people are just bidding this stuff up to ridiculous levels. I don't really think that says a lot about the broader market, because I that's not happening with the majority of the stocks at the top of even the Meg 7. I mean, Tesla obviously is in la la land, but that's kind of it always has been. It's its own game. It continues to defies logic to watch the market bidding up those kinds of things in this environment. It's hard for me to wrap my head around.
I will say though, my least favorite among the group, Carvana, is now in about a 16.5% drawdown.
I'm surprised it's not 50.
Well,
I'm surprised it's not 65.
Maybe on its way.
Yeah,
early days.
Yeah, and the reason I talk about these guys is not to get over the top or overbearing or dour and trying to always talk. The bottom line is the majority of money driving the price of these stocks is retail investors, and retail investors have a really, really bad track record of ending up being bag holders, and being exit liquidity for a lot of people. And I think it very much appears to me that's what's going on. When you watch a stock like CoreWeave run like it is in the face of needing 23, the question I'd have is how many of their investors do you think know that they got plans for 23 billion in CapEx this year?
Or what CapEx even is, yeah.
Right. Or what CapEx even is. I bet you the number's probably less than 15 or 20%. And I might be being way too generous on that side of it. But yeah, if you own that stuff at home, congratulations for owning it. I'd be very, very careful with that stuff, guys. There's a lot of those types of high flying popular companies out there that there really is no fundamental underpinning for the price. And you look at CoreWeave, I don't think I'd be a buyer at their stock at a $10 billion market cap. I think that's a business that looks really ugly off the. That being said, we just had a used car company, a company that sells used cars, hit 75 billion in market cap. So I don't see races to get into the used car business. So like I said, you're needing less mimetic power to drive these things. What else you see that was interesting today?
Well, one thing is nat gas. The latest weather models have the Northeast getting real hot, which is going to drive a lot of cooling demand. And I mean, you're up through over 3% on front month, but I honestly legitimately ignore front month gas because it's so wild. But if you look at the December contract for 25, 2026, 2027, all this stuff's kind of breaking out. And then the star of yesterday's show, soybeans and soybean oil, and we can even talk soybean meal. That stuff just continues to look appetizing as much as soybeans themselves aren't.
That's how you know you've been looking at markets too long, is when you're watching the soybean moves. It feels like a scene out of Trading Places, right? I mean, I
would trade anything, and my Kalshi account proves it.
Yeah. Oh, I love it. Other than that, I just think you've got a market right now that's just being dominated by clearly not fundamentals, but geopolitical movements, and which isn't surprising. When geopolitical issues are on the front, the market tends to just look at that and that alone, right?
And one other thing I'll add there is I've talked, I don't know, for 2 weeks now, how I expected we'll get stuck between 59 and 6100 because of all the options, all the gamma that's located in there. And here we are. I mean, we're 18 points under 6,000. And remember that Friday we have a huge options expiration. You unpin a lot of, it's like having this huge vice holding something in place, and then you just take it off. So we can move. Now that doesn't mean you have to move up. It doesn't mean you have to move down. It just means you can move from Friday on. But at the same time, we have the JP Morgan options well, where they do huge options positions for some like ETFs or mutual funds or whatever. And I think that strikes around 5,900. So similar story there. Like it takes a very big, thing to move through that. So if you think back to April, we, had a similar March, April, similar situation where it's like, well, we probably can't move because of that. And then, at that point, Trump with all the tariff policy was kind of like, hold my beer. And we did move through it, but typically you're just not going to. So you might,
especially in the summer,
short-term fireworks on Iran stuff, but it better be big to get us under 5,900 in a meaningful way.
Yeah. I mean, despite what happened last summer, because we did have a fairly sizable move last summer. The other thing that, look, if you're playing the odds in markets, if all you do is tell me, look, it's summer, or you're going into summer, the VIX is at 25. We're not there right now, but I'm just saying the VIX is at 25. Are you a buyer or seller? If that's all I know, I'm going to be selling the VIX at 25 in summertime.
Yeah.
Right. Just your odds.
If you're in the teens, I'd already be buying it, but it's 21. It's like,
it's right at that pain point. Yeah. Because, I mean, if you were 17 right now, it'd be a wonderful little cushion to have on the side of a tail hedge. That's about does it for me though today. Kind of a quiet day. Like I said, markets just kind of staring at geopolitical risk and didn't see a lot of things really flirting with interesting levels outside of silver. Obviously, I think silver's got some fireworks potentially here, but other than that, I don't see a lot. You got anything else?
No, I'm all set.
All righty, guys. Wait. Yep. Yeah. Just a reminder, you go want to catch that interview. It should be posted sometime today, probably after the dots would be my suspicion. But you're going to want to catch our interview with Brent Johnson that we just finished up about an hour ago. And like I said, that'll be out today. And you can catch the video of that as well on YouTube. Just search Know Your Risk Podcast. You guys know the drill. Have a wonderful evening. We'll see you again tomorrow. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.